Hi, good evening everybody. This is Kel and this is a weekend special MAO. It's only for this weekend, so I want to share this with you. Now, I kind of expect the Dow Jones to trade towards 33,258 soon, and I'll share the reason with you. But before we go there, once again as well, please do understand disclaimer applied as usual. Alright, and thank you AIMS for the kind sponsorship. Now, what leads to this thing is because I noticed that there's something ongoing right now. You can see that last Friday, the Dow Jones tumbled 300 points. And the main reason for that is because the producer price index actually was higher than expected wholesale price. It rose 0.3%. And I've been telling people that likelihood inflation is going to come back again. So if I'm going to get it correct, then things will actually, the elevated risk of the interest rate factor will come back in again. And you can see from the numbers here that this coming Tuesday will be a big one. It's a core CPI data. And although the previous and the forecast was 0.3%, I just got this feeling that it may stun the market with 0.4 instead. And of course, on Thursday, we have the FOMC meeting. And of course, we expect the Federal Reserve to increase by 50 basis points. Now, to me, 50 basis points is definitely confirmed. But what if they decided to do a 75? That would be a stunner. But if you ask me, I think it'll be a 50 basis point and plus another 50 basis point in the coming January time. This is how I feel about the market. I'm not too sure how you see it. At the moment now, the US weekend data is down by 3.4 points, so it's nothing too damaging. But if you look at the market right now, let's take a look. This is the Dow Jones chart for you to take a look. The Dow Jones chart now at the moment, if you plot it from the highest point to the lowest point, the Fibonacci, you can see that the market now is actually trading at around the 61.8 and 33,792. And you can see very clearly the market actually tries to go above it, but fail, and the closing towards the end doesn't look good. So what you can foresee from the cash market, we can see coming down all the way to 32,814 area. And of course, that is a spot market, and the S&P 500, very clear, you can see that there's a huge rejection at the MA200, and this will likely propel the algorithm to come in to cover the market. It could actually bring the market all the way down to this point here to cover the gap, and that's about 38.11 level. Alright, and last but not least, I'll show to you this something very important, which is the 10-year yield. Then you can see the 10-year yield right now. Let's show to you right now. Give me a minute. Alright, this is 10-year yield, and you can see that it really raised, it went above the 3.4% mark, which is something that I mentioned, and it's climbing up. Right, yesterday alone went up by 2.81%. So if the market really goes to here, which is 3.64, this is going to make the market a bit of fearful, right? And if you look at my chart right now, this is the main driver. The market do a reversal, and we are now very near to the 90% mark, and that's the number I mentioned, 33,258. All right, so we are just around probably about 300 points away. So it is very possible. And of course, using my TWB indicator, you can see very clearly the market has been staying above the support level, the BNB SL level, for 3 days. But yesterday, or Friday to be correct, the market closed below it, and that means that the market has a very high potential to go down to 32,572, which is something very similar to the cash market. And both my indicator KSI and KRW both are red, so again, this may actually give us a chance to see it coming down. Alright, so traders, you need to be very careful in the coming week. And last but not least is the gold market. Now, gold is really firming very nicely, but of course it was the dollar increase, so it pulls back on a high of 1806. So I suspect that gold may come back down to approximately about this point here, about around 1765 area. And of course, if the gold can stay above 1765 area, I think this will be a very good bet to buy somewhere now, because gold at the moment now is seemingly decoupling from the dollar, and based on what I'm saying here, gold could pull back and then gold continue to go up again. Gold may test 1817 area in the time to come, 1817 area. And of course, silver is the one good bet there. We've been very bullish on silver, and if silver had already hit the support level at $22, and now it's back to $23, new high for this year. So I believe that silver will go towards $24.86 in about 2 to 3 weeks time. So I'm still very bullish on silver. So traders, you can watch out for this. Alright. So I hope this weekend video has shared with you some insight understanding tomorrow market. And of course, if the market really starts to sell tomorrow, do understand the first target is the level I mentioned, 33,258. Alright, so this is Cal signing off. Have a great weekend. This is Cal. Bye bye.